stupidly cheap gold assets is gone for this cycle. I think that shut at the end of the summer last year. You could have got whatever you wanted for nothing, pretty much in the first half of last year. Equity markets were so weak, despite a strengthening gold price. Now there's clearly capital available out there for precious metals companies, and producers are making significant profits. So I think that window's shut. I still think that you're in the beginning of what will become a much broader M&A cycle, in the sense that look at the amount of cash flow these companies are making, $1,000 to $1,500 margin. And
welcome to another edition of CEO and Market Expert Interviews. I'm your host, Lucian. Most of you know me as Triangle Investor from social media. We are talking today about Heliostar Metals, a gold mining company with producing mines and development assets in Mexico. I'm joined by their CEO, Mr. Charles Funk. Charles, thank you for joining me today.
thank you very much for having me.
Thank you. Let's start with the gold market. Gold prices soared to an all-time high yesterday. Gold market seems to be very strong at this moment. How do you view the market today compared, let's say, with the market a year ago? And what are your expectations for the remainder of 2025?
Yeah, I think probably we're one of the greatest metrics in the change in the gold price, given that what we paid for the assets that we bought off Argonaut, and what they're valued at today. The gold price, it's incredible how quickly it's gone from $2,000 to $3,000 an ounce. And more importantly, margin expansion, which matters fundamentally more than the gold price, is at levels we've never seen historically. So you had an gold equities market where people weren't interested in gold assets before summer last year, and clearly completely the opposite the case today.
That's good to hear. Your company has projects in all phases: production, development, and exploration. Let's start with unpacking all those assets, but first, maybe the production assets. You have the operations from San Agustin mine and La Colorada mine. And my first question is actually, can you give us an overview of those assets together with some last production numbers and metrics?
Yeah, effectively the company's gone from, if you're frank, some fairly scrappy production last year, moving to sustainable production this year going forward. And I think by the time we bring Ana Paula online, really high quality production. I think that's the profile that we have as a company. In terms of the two deposits, if we start with La Colorada is in Sonora, just outside of the town of Hermosillo in Mexico. It's always been a great 50 to 100,000 ounce a year producer. It was actually one of El Dorado's first gold mines in the 90s. It was a key asset as Argonaut built in the 2010s. And so when we acquired the asset, an open pit heap leach operation based on an epithermal gold deposit, it was in care and maintenance. It had been shut down since September 23. And in the 6 months that we've owned the assets, we've got it back into steady state production. We have now a 6-year mine life ahead of us. It was an asset that just needed some capital investment, and we think it's got a lot brighter future from the work that we've put out over the last couple of months.
Yeah, the producing mines are forecast to produce between 31,000 and 41,000 gold equivalent ounces in 2025 at the cash cost, if I remember correctly, between 1,800 and 1,900 per ounce. Now, how are those numbers looking forward, let's say in the next couple of months? And you said mine life is 6 years, right?
Correct, at La Colorada. So in terms of production, I think we're going the right way. Our production profile is forecast to grow over the next couple of years, and our cost per ounce is expected to decrease. So we were producing we produced just under 1,500 all-in sustaining cost in Q4 last year. The step up this year is restarting operations. At La Colorada, January and February, we're crushing and stacking ore, and it takes a while before that starts coming out into the ADR plant. So that combined with at the back end of the year, we're going to restart San Agustin in Q4, move from residual leaching to active mining. So the higher costs this year are reflective of restarts of the operations. I think they can go back to an AISC of around 1,800 next year. And then when we bring Ana Paula on, I think we can materially drop our AISC as a company below 1,500 zone.
That is brilliant. What are the next steps for the production assets? Let's start with the remainder of 2025. What are the plans here?
Yeah, so at La Colorada, we've got 2 stockpiles and 2 pits that we can expand. So we've been very aggressive with a drill program in one of those pits. There's a lot of shallow material in the expansion of that pit that was considered to be waste. And we've demonstrated some pretty good gold results, 5 to 50 meter widths of 0.3 to 1.5 grams oxide gold. And that's a great outcome because you've already assumed in the cost of the PFS in January that you've got to move that. To get paid for it makes a big impact on the economics. So we're going to update a feasibility study at La Colorada mid this year to support that expansion. We can put pretty considerable amount of cash flow as a combination of those stockpiles and one of those pits over the next couple of years on our balance sheet for very little capital outlay. So La Colorada is looking good. It's generating pretty significant cash flow at the moment, as demonstrated by our last quarter and the fact that we paid the debt off months earlier than we thought we would, the acquisition financing debt. And it's about production expansion and resource expansion. We ultimately think La Colorada has an underground mine life beyond the open pits, and we're doing some drilling now that will hopefully start to demonstrate that. At San Agustin, we've got residual leaching on the current pads that's still making well over $1,000 an ounce today. And that's the power of this gold price. We expect to get the permit to expand La Colorada around the middle of the year, and in Q4 we'll restart operations at San Agustin. So basically, as Argonaut struggled with the Magino build in Canada, the Mexican assets got starved for investment capital. We're now putting that back into those assets and bringing them back onto a sustainable production footing.
Quick return to cash flow. Do you have any projections of this year cash flow from the existing mines?
Yeah, if you do the maths on that 30 to 40,000 ounces at somewhere below a $2,000 AISC, you're talking 30 to 40 million US of cash flow today. That's and our business plan all along has been to use that cash flow to reinvest in the business, and that's exactly what we've been doing, expanding mine lives and bringing Ana Paula forward.
Got it.
Or progressing Ana Paula forward should be a better turn of phrase.
I understand. Yeah. Development side, your latest addition to the portfolio is Ana Paula. You're advancing that project and expect 2028 production. What steps do you need to achieve before first production?
Yeah, so for people who don't know Ana Paula is the highest quality project in our portfolio, our clear sort of flagship that we're heading towards. So it's got an open pit permit. It has had a PFS completed on it with that in mind, but we bought it, with a very different concept in mind that it made sense as a high-grade underground from technical merits. It wasn't a political decision because of that permit. And so we've been sort of systematically, we did a big drill program in 23 to change the scope of the project. Got to sort of 700 M&I ounces, another 450 inferred ounces at about 5.5 grams per ton gold over a 60-meter width. So it's got a very impressive grade and width for a bulk underground mine. And so now we're progressing with the feasibility study on Ana Paula. We think we can demonstrate some pretty exceptional economics when we put that out. It's got a number of advantages. It's shallow. It's got really good ground conditions. There's a starter zone of 200,000 ounces at over 10 grams. You're talking about rock worth $800 a ton today. That maybe has $100 to $115 a ton mining and processing costs. That, if you're able to do the maths, and at some point I'll be very happy to share it once we get the studies out. You're talking about very, very high margin, potentially 1 year plus or minus payback on a pretty significant asset. And so we're busily completing that. We got offered yesterday, which was quite a surprise, the bought deal financing that we chose to accept given how strong the terms were. And the key to that is more drilling at Ana Paula. We'll be able to convert more of the inferred resources across. We think we can grow it to around 1.5 million ounces of underground mineable material. So we're just keeping our foot to the floor. We'll deliver the feasibility study by mid next year, 18-month build time to bring Ana Paula online at the beginning of 2028, as you said. I wouldn't be surprised if we could have, sub $1,000 AISC, at least at the beginning of the mine life, above 100,000 ounce production purely as a function of that higher grade. Ana Paula is going to be one of the most attractive development projects in the market, I believe.
Sounds very exciting. You mentioned it is shallow. How shallow? How many meters are we talking here?
Yeah, so the high grade panel that's the focus is only 250 from surface down to 250 meters below surface. There's already a 400-meter decline that we plan to complete. So from that perspective, very attractive. There is a deeper part of Ana Paula that's open. There's some deep holes like 13 meters at an ounce, 40 meters at 6 grams. When the decline's in, we'd look to grow the deposit because geologically it's more shallow than its neighbors. The two closest deposits to Ana Paula are 15 and 20 million ounce deposits. So it's possible. I believe Ana Paula is going to be a very profitable mine. It could also become a tier one gold mine. We need the decline down and we need a bit of exploration success and luck, but we're certainly in a district that's capable of that.
Yeah, your San Antonio project, is that in the proximity of Ana Paula or is it more distant?
No, so it's in Baja. We've got two big sort of open pit development projects that sit there as sort of long-term optionality for us as a company. The Cerro del Gallo project in Guanajuato and San Antonio and La Paz. You see the economics we put out in January for San Antonio are exceptional. Very low capex, very high return on investment. It's an incredible gold project that's worth nothing without a permit and probably worth $500 million with a permit.
Wow.
And we have just a quiet long-term plan in the background of how we think we can bring that across the line. We got very close to being permitted about 5 years ago. It's one of those things that we don't try to create a lot of management expectation around, but one day I'd like to be able to surprise our shareholders and say, here's a game-changing asset for the company.
Okay, and you have the third development project, that's Cerro del Gallo project. What are your plans there?
Honestly, it suffered a little bit because of we're a small company still building our plans. So our focus has been on the two producing mines in Ana Paula. It's another nice development opportunity for us. We'll do a bit of work over that in the coming couple of quarters, but it's got a 2.7 million ounce historic resource, which we plan to update the technical report on. We've got over 3 million ounces in M&I across the rest of the portfolio. We've got a pretty deep portfolio for a company our size.
I agree with that. And I saw your valuation, your 200 million market cap company and impressive, very impressive assets for a company of that size, especially with two producing mines and one, like you said, Ana Paula has a lot of upside in that project. You have the exploration side as well in the company. You have one asset that is not in Mexico, it's on Alaska, right?
Correct. So philosophically, we wanted to build a mid-tier gold producer. It's been a key part of our business proposition from the day we were founded, and we started with a project called Unga in Alaska, a very good project, very high-grade project, 13-gram resource, 400,000 ounce that I think will get to a couple of million ounces at 5 to 10 gram range. Where we struggled was the market wasn't there. It wasn't supportive of the kind of expenditure that we would have had to have done to advance Unga. And so in such a horrible market, we pivoted and worked out that we could buy advanced projects so much more cheaply than we could drill off, study, permit Unga. And so that's when we took those big leaps forward with the acquisitions that we've just discussed. So we sit with some really nice projects. Right now, we're drilling the projects that I think will come in. The reason the Colorada and Ana Paula are getting the rigs is because they're going to add ounces into production the quickest. Should we continue to add cash to our balance sheet that we are now, it opens up a lot of potential to grow the resources. I don't think we have a project in our portfolio that doesn't have an open resource, which is quite incredible, really.
Agreed. How is the current security situation in Mexico? And actually, how is your experience of doing business so far?
Yeah, I'll answer it in the opposite order in terms of getting an understanding of my background. So clearly, despite being listed in Canada, I'm not from Canada originally. I grew up in mid-tier and major gold companies, most notably Newcrest in Australia. I wanted to be a bit more entrepreneurial, so I came to Canada and I started working in Mexico, maybe 10 to 12 years ago. And so worked for a prospect generator company as a geologist, got to see a lot of Mexico, particularly northern Mexico. Then I was the VPX for Vizsla Silver, which was a wonderful period of time in my life. Led what's turned out to be a fantastic discovery in
Yeah.
Sinaloa. Um, and then more recently done M&A up and down the country. So um, I'll never know as much as someone who lives and breathes and born and Mexico's their entire life, but got pretty considerable commercial and business experience over at least a decade. Got a really good network of sort of contacts and colleagues, both from a technical perspective, financial perspective, commercial, social, that's allowed us to build as quickly as we have. And Mexico, I love working in Mexico. It's a part of the world that some people are very happy with and some people don't want to invest in. It has times where it's very stable. It has times where it's less stable. I'd say broadly, it's going through a period of increased stability recently. And it's clearly a place that Canadian companies can do business. You've seen a lot of value creation in Mexico. So, our operating assets are in Sonora and Durango, which is kind of the equivalent of being in Nevada and Arizona in the US. Our development project, Ana Paula, is in Guerrero, which is a place that's historically had a pretty poor reputation. The simplest analog is we're 20 k's north of Torex. That must be coming on close of 7 years of just quarter in, quarter out, steady state production. So, if you're a Canadian company, if you know how to operate in Mexico, if you move steadily with stability and carefully, it's a great jurisdiction to work in.
Good answer. You mentioned Vizsla Silver. I had Michael Connor, CEO, a few times in my show, and I asked him the same question that I'm about to ask you. Do you plan any M&A?
Interesting question. We've been offered a lot of M&A over the last few months. It's been pretty quick to dismiss most of them. Obviously, we've got a strong pipeline in front of us. So when we look at the M&A world, we want to be a 500,000 ounce a year producer at the end of the decade. That does imply that we do some M&A along the journey. Right now, it would have to be a pretty unique opportunity in the sense that the producers are still, because we're sort of getting those quarters of production and these studies out that I think will increase our valuation. The producers are further ahead of us in valuation. So on face value, without a special circumstance, they aren't making sense. And then we would need a development project better than Ana Paula, and there's not many going to be like that in the world. So we do get a lot. We do look at the occasional project. We do ultimately plan to grow, but we're a really strongly technically driven team. We had the strength of our convictions on Ana Paula when a lot of people took a different view, and I think we've largely turned people's minds around. Again, the assets we bought off Argonaut, everyone thought that they were old and tired, and I think we're able to demonstrate that there's a lot more mine life in them. So for us to take on a project, there'll have to be some kind of technical merit that isn't there on face value. We're unlikely to just grab something that the latest banker wants to move. It'll be something that we've looked under the hood and formed a technical opinion on.
Yeah, you acquired your assets at a very good valuation, good timing, but do you believe that the time of cheap assets is behind us?
The
Cheap,
time of
I mean,
the
cheap,
time of
good and gold assets.
the time of stupidly cheap gold assets has gone for this cycle. I think that shut at the end of the summer last year. You could have got whatever you wanted for nothing, pretty much in the first half of last year. Equity markets were so weak, despite a strengthening gold price. Now there's clearly capital available out there for precious metals companies, and producers are making significant profits. So I think that window's shut. I still think that you're in the beginning of what will become a much broader M&A cycle, in the sense that look at the amount of cash flow these companies are making, $1,000 to $1,500 margin. And we've all lived long enough to know that there'll be repair of balance sheet, then there'll be pressure from major investors to grow the businesses. And sadly, that always ends at the top of the cycle with a lack of discipline. And that lack of discipline is going to be seen in probably M&A that doesn't make sense. So I think there's still probably cheap assets out there in a relative sense, but I doubt we'll be able to buy the portfolio that we bought for $15 million
Agreed. Agreed. Yeah. You mentioned that you announced the upsized 17 million raise, if I'm not wrong. When do you expect to close that, and where is that money actually going?
Yeah, good question. So the close will be Friday next week, so 8 days from now. Um, it's been an interesting conundrum as the CEO. When you buy assets like this, a lot of the times and historically, it's never performed as well as people expect, and there's always kind of a suspicion and expectation that you're going to need more money to make it work. And so I was very strong that we didn't need that. Some of that was because of the decisions we've made. The other part is this gold price has been, you have to acknowledge when things are going your way as well. And so we were really keen on demonstrating that we were cash flow positive. I was ultimately trying to put a couple of quarters of production together so people could see that and demonstrate to people that we could deliver as a team. My initial response was that I would rather have not done it. But I've always said that I reserve the right to raise capital if A, it accelerated production, or B, if it grew our resources. And so clearly, this is a pretty strong window right now. And we got offered financing on excellent terms, at $1, which is a 2-year high, give or take a couple of days, with no warrant. At a nearly 70% premium to the last financing that we did. So, and I think you'll see some really strong names that are behind the financing. So what it allows us to do is probably threefold. The first and most important is turn the rigs loose at Ana Paula, our version of drill, baby, drill. So that's something I've wanted to do for a long time, but I'd focused on strengthening the balance sheet. The second part is that as we've grown, we closed the deal with $2 million US cash on the balance sheet in November. We grew that to 5.5 at the end of December. We're sitting on about 10 million now. So we're making a couple of million a month as we stand. But even despite that, once with that bigger market cap, talking to some of those bigger funds that I think will help us go from $1 to $2 in share price, one of their concerns was the balance sheet, the what if something happens question. So this, to a large degree, neutralizes concerns around our balance sheet. And then the third factor is we plan to restart San Agustin in Q4. This puts the capital on the balance sheet to do that. So we had 3 very real uses of the capital that I think improve our share price, which is why we accepted it and the upsize.
Yeah, as you said, you have big names behind this financing. I will not ask you the names and you cannot say them, of course, but you already have shareholder base that is very strong with over 50% owned by the institutions. You have some familiar names that I can only presume that they will be in this financing, like Eric Sprott, Franklin Templeton, and the other big names. So are those groups supporting you in your everyday operations, in your way of handling running the company? That's my question.
Fundamentally very supportive in the sense there's a perverse benefit of trying to do what we did. We were very out of vogue and unpopular while we were putting these assets together. The market wasn't valuing what we were hoping that they would down the line, but it made sense to us. And we wouldn't have been able to acquire these assets without some very significant support. To touch on one you mentioned there, Franklin Templeton, they came down to a market cap materially below what they would normally consider investing in. Because they saw the potential of the business proposition that we put out there. And so the benefit of that it's been difficult to raise money over the last couple of years has led to some really strong funds. And all that time and lately, Eric's been continuing to increase his position. He sees the potential that we see with the asset base. So they've been really supportive of us to get to where we are to now. I'm kind of grateful as a management team that we've been able to show a good return on that investment, because then it becomes a virtuous cycle. But we would not be where we are today without the support of those shareholders who played the long game over the last 2 years.
Yeah, Charles, final question. Newsflow, what can investors expect in the terms of Newsflow in the next couple of months?
Yeah, so we've been very busy for Newsflow and will continue to be. We'll have more results from the Colorada. We think it's got the potential to go as an underground deposit beyond the open pits. So we're drilling some holes that will hopefully demonstrate that we're right in that theory. We'll have the first quarter of this year to come out. Now on the back of this financing, we'll restart with some aggression, the drilling at Ana Paula, and then work to the middle of the year, which is slightly beyond the scope that you just asked, for the updated economics for the Colorado. And I think they've got a chance to materially improve. So some pretty big catalysts. One more, the potential of the sulfides at San Agustin. We think there's a pretty attractive sulfide resource available at San Agustin. We've never done the network, or no one's ever done the network to know how viable that is. So we've kind of got a series of ordinary course of business deliverables and a lottery ticket at San Agustin as well.
Okay, that was Heliostar Metals CEO, Mr. Charles Funk. Charles, I wish you luck going forward, and let's talk soon with new updates from the company.
Thank you very much for the interest and taking the time.